Welcome to Money Anna. My name is Anna and I'm here to help you take control of your own portfolio and get confidence managing your own financial life. In the next 10 minutes, I'll tell you about those 3 stocks I've purchased in June and I'm following now to decide whether I should put more money into them or diversify my portfolio with other stocks in July and August. Because whatever happens, I'll keep buying stocks monthly. Consistency is my everything. The summer 2020 has begun with a high level of uncertainty. The stock market is wild. Market 2020 is an investor's nightmare and a trader's dream. Being a very prudent investor myself, I'm super confused about what's going on as market analysis doesn't work anymore. Anything really works anymore, and there is no reliable data to base your buying decisions on. Fed keeps printing money. Inexperienced investors keep spending their lifetime savings to buy the riskiest stocks you can think of. The trajectory the pandemic will take from here is unknown. Vaccines are still being tested. Some say the economy is recovering. Others are sure that we are at the very beginning of a very long recession, even depression. I'm a glass half full kind of person, and I'm sure this crisis will have expanded the horizons of all of us, in a way. We'll rethink a lot of concepts and we'll learn a lot, and I'm persuaded that despite all this craziness, for long-term investors, some things haven't changed and will never change. The tried and true strategy of finding high-quality companies, buying their shares at reasonable prices and holding them for considerably long periods of time will never go out of style. It has always worked, and I do think that's the only strategy I can rely on in this era of uncertainty. I've always admired Warren Buffett's approach. He doesn't really care about the market, and he couldn't care less about stock charts, newest market talk, new hypes, etc. Investing is for him simply buying into businesses, and it definitely makes sense now, even if the big recession is coming. Sorry for the long introduction. Ready for action? Hit the like button and let's go. My first pick was Intercept Pharmaceuticals, ICPT. Here to date, Intercept hasn't exactly performed well, with its stock down by 24% since the beginning of 2020. And I think this situation means a buying opportunity for investors, as despite the fact that Intercept's financial results aren't impressive at the moment, its fortunes can soon change for the better. To see why, let's have a closer look at their sole product on the market at the moment, Ocaliva. Ocaliva works by preventing bile acid from building up in the liver and was first approved by the United States Food and Drug Administration in May 2016. For the treatment of PBC. Intercept is currently looking to add a second indication to Ocaliva. In September, the company submitted a new drug application to the FDA for Ocaliva as a treatment for fibrosis due to non-alcoholic steatohepatitis, or NASH. NASH is a condition caused by a buildup of fat in the liver that leads to inflammation. It is a condition that currently is on the rise and is projected to continue its up trajectory. According to Intercept, there are about 19 million NASH patients in the US alone, and about 16 million of them have fibrosis. Consider that there are currently no FDA-approved treatments for fibrosis due to NASH, which means Intercept has a huge opportunity ahead. According to my research, chances are high that Ocaliva will receive FDA approval as a treatment for fibrosis due to NASH, which means that the sale of this drug will skyrocket, significantly improving Intercept's financial results. That's the reason why this biotech company got on my watch list, and I've added its stocks to my portfolio, taking into account the poor performance in the past, this big catalyst just around the corner, and the fact that biotech stocks are regularly valued at 3 or more times the peak annual sales potential of their lead drugs. So Intercept's market cap of around 2.4 billion makes it a big-time bargain right now. The second stock I've purchased recently is US Bancorp, USB. Well, it's an expensive one, and for a reason. It has consistently been the most efficient and profitable of the country's big banks. Look how its return on equity and return on assets have compared to those of JP Morgan Chase and Wells Fargo. But the pandemic has hit US Bancorp stock price hard, and unlike most other big banks, US Bancorp doesn't have a large investment banking operation to help balance the risk out. So, of course, the near-term risk is still there, but this bank has consistently shown responsible lending and excellent management. Now, its stock is at its lowest valuation since 2009, and I decided to add this bank to my portfolio. And the third stock I wish I purchased even earlier this year is TEVA Pharmaceuticals, TEVA. It's a global pharmaceutical company with headquarters in Israel and United States that develops, manufactures, and markets both branded and generic drugs, as well as active pharmaceutical ingredients in North America, Europe, Latin America, Asia, and Israel. Okay, I know. If you're interested in buying biotech company stocks, you've already certainly heard of TEVA now. And yes, the revenue for most of the company's drugs has been falling. The company was involved in multiple opioid epidemic lawsuits, and the company's debt levels are considerable enough to frighten potential investors. But I still think Warren Buffett is holding his position in this company for a reason. Two facts speak for themselves. First, TEVA's shares are trading at only 0.8 times its price-to-sales ratio. And second, TEVA has managed to pay off almost 6 billion of its total liabilities in only 2 years. It shows that this company has a realistic pathway to paying off its debt and can actually do it within a decade or even less. I think I've read about all possible pros and cons here, and looking at this company from many perspectives, like its management and operations, I decided to trust my gut feeling and buy this one. So, yes, one more biotechnology company in my portfolio, and only time will tell if it was the right decision. I think you should be proud of yourself, seriously. Even if you haven't started investing yet, you're already making the right steps by thinking of opening your own self-directed brokerage account and educating yourself about the basics of investing, making savings, and looking for the right stocks to buy. You don't have to be a professional. All you need is to stay consistent on this journey, month by month, year by year. And to your own surprise, you'll soon outperform your friends who are paying out-of-control commission fees for their managed portfolios. Wishing you luck and consistency. Subscribe to Mariana and enjoy the journey.